Starbucks misses significantly on Q1 24 earnings, down 15% on earnings per share and 6% for revenue expectations. Here's why this is going to be the beginning of a bigger crash for Starbucks. I'll break it all down by taking a look at the company financials, stock graph, and most importantly, key macro variables that you do not want to miss. Now let's talk about Starbucks core company financials. First, revenue, $37 billion a year. That's really good, and that's an 8% growth year over year, which shows a lot of strength in the face of a very tight consumer pocket. Then moving ahead, net income, 10% profit margin at $4 billion. That's also really good. My cause for concern is the cash on hand. Starbucks only has $3 billion of cash on hand, and in conjunction with some of those macroeconomic forces I'll talk about in a moment, you don't want to miss that because that is the icing on the cake around why I am not bullish about Starbucks going forward, is that if there's any kind of issue, that cash will be burned very quickly in a also not favorable debt environment. Then moving ahead, the stock does yield a 3.1% dividend yield, but unfortunately the stock is also down by 21% at the current time of recording on May 1st, 2024, and that significantly underperforms the S&P 500. So let's go right in and talk about some very, very important macro variables that will impact Starbucks. To be able to understand where Starbucks is going to be going in the near future, we need to understand these important macro variables. First, money supply growth. This is the underlying driver of inflation. On a year-over-year basis, money supply has grown by negative 1.7%, which is not adding to inflationary pressure, but on a quarter-over-quarter basis, there has been a little bit of growth, which kind of neutralizes it out. Overall, that's not a bad number. Moving ahead to inflation. Inflation on the headline is 3.5% and 3.8% for core. That is above target for the Fed on both metrics, but at the same time is moderately high, but not too bad, just like what we had in 2022. There's essentially a plateau there. Then moving ahead to things that really start concerning Starbucks' outlook into the near future and a couple years down the road, continued unemployment claims are up 35% from the economic cycle floor in June of 2022. That's important to know because anytime there has been over an economic cycle, an increase in continued unemployment claims by at least 15 to 20%, a recession followed within the next 12 months' time. Essentially what that says is the economy is hanging on by its last legs, it's weak, the consumer has been pinched, which is very important to know for a company like Starbucks, and any kind of shocks, and there's a lot of potential shock risk I'll talk about in just a moment, that could basically tip the economy over into a recession. Now, moving ahead, in the market discount cycle, and the logic for the market discount cycle is that every 3 to 4 years after a period of strong growth, the stock market then corrects over that year or 1 to 2 years because of the coordinated efforts of fiscal and monetary policy along with political cycle alignment to allow for the discounting of either rising inflationary pressure or rising unemployment numbers. Now, in the 3 to 4 year market discount cycle, we are in year 2. In 2022, that was the last instance of that. So in a macro picture, especially if you look at the backdrop of the presidential election this year, it's highly unlikely that there would be coordinated efforts to weaken the stock market and affect consumers going into November. So that's important to know. We're at year 2. The macro backdrop is favorable. Doesn't mean that a shock can't trigger a recession. Now moving ahead, the market valuation currently for the S&P 500 is 28, just a little bit over that. The average is 21.5. So the market is overvalued, which means that since it is a little bit into a mild bubble, any kind of decrease in the near future due to rising unemployment rates or inflation will lift and sink the tide of all stocks a little bit more aggressively than if that number was around the median, which is 21.5 over the past 33 years. Then moving ahead to the major cycle. So the theory on the major cycle is that major conflicts that impact both domestic and international issues happen every 84 and 248 years. In that cycle, we are at year 83 of 84 and year 248 of 248. Basically, this is very important to know because That basically means that unusual, almost black swan events could happen that impact the financial markets. And if that all correlates at the same time as the market discount cycle does as well in the near future, then that could also bring additional issues for especially sensitive stocks like Starbucks. Finally, wrapping up the macro variables, let's talk about monetary policy and fiscal policy. Right now, both of those policies are favorable for the stock market because the stock market is in a position of being at year 2 in a market discount cycle, and that basically means that there will not be a coordinated fiscal and a monetary effort to cause the discounting of either rising inflationary pressures or rising unemployment, because it is not conducive to the political cycle. So most importantly, the takeaway out of this is there are some major headwinds that are coming into Starbucks that could impact consumer spending further in the form of additional inflation and unemployment rises in the near future, both in conjunction of what's happening in the economy and also geopolitical shock risks that are coming with the major cycle as well. So rounding that out, government spending should continue to keep the economy floating just around, the upper 3s for the unemployment rate, really causing a pinch in the pocketbook of consumers. So that is not favorable for Starbucks. Now, before I give my prediction on Starbucks, make sure to click the link down below to learn about the key cycles that drive the stock market and get stock rankings so you can find the very best opportunities. So let's break it all down. What do I think about Starbucks? So in the big picture, Starbucks core financials are solid, but at the same time, growth prospects are, although 8% year-over-year growth is good, I consider it very negative in the face of the next thing, macroeconomic environment. Currently, the macroeconomic environment is conducive and favorable to stocks in the whole, but sector specific like Starbucks, this is where I'm concerned, not only right now, but also in the landscape of what's to come with the major cycle and some other pressures as well. Long term, I'm not bullish on Starbucks, unfortunately, even though it makes a great cup of coffee. And in the short term, it continues to be more volatile and more downside than the S&P 500 and some other popular growth names. That's all. Make sure to subscribe to the channel, and I'll see you on the next video.